So I kind of want to give you a little lay of the land of what to expect tonight. But first, we will just do our quick introduction. If you are not familiar with who we are, what we're doing here, this is the Phipps Real Estate Group Investor Social. And I'm Natasha Phipps, and we do these events. We try to do something every month, whether it's virtual, and now we're tiptoeing back into live events as well. But the point of these events is to keep you guys informed as to what's going on out there, what we're seeing as being real estate investors ourselves, investors, specialized realtors, and we bring in guest speakers as well to help inform you and educate and keep us all moving forward and in the loop of what's going on out there. So this evening, we are going to be doing a market update. Andrea Tessier, my partner at Phipps Real Estate Group, is going to be speaking after me here and giving us a just overall market overview. What is happening in the market? What do you need to know? What kind of market conditions are we in? And then Ryan Bond from MortgageLine is here, and we're going to have a mortgage update. I know we have all been through it all here the last couple of years, and moving into fall, Ryan will kind of let us know what we can expect, hopefully, here. And then I'm going to speak after all that on some strategies that you might want to consider. What I'm hearing, talking to a lot of investors, what I hear is working for people, what might not be working so well right now, and talk about the actual tactical things you can be doing to help you with your existing properties. And if you're moving into the market or exiting the market, what might make sense for the remainder of this year. So, and at the end, of course, if there's questions, we'll address them at the end. This will be recorded, as you can see, and we will have it up on our YouTube channel. If you are not subscribed to our YouTube channel, it's called Calgary Real Estate Investing. I think we almost have 200 people subscribed on there, so that's pretty cool. And we put all of our events up there, so if you ever miss anything, please subscribe to us there. And the other way to keep in touch with us is our Facebook group, Calgary Real Estate Investing Facebook group as well. There's well over 2,000 people in there now, and we post our events and opportunities. We do some live streams in there, and people can ask questions and stuff as well. So please join the group if you're not in there already. But we will get started here. Did I miss any questions or comments? No, looks like everyone is coming in, so that's fantastic. Okay, let's get started. I'm going to pin you, Andrea, so everyone can see you and spotlight you. So this is Andrea Tessier, my partner at Phipps Real Estate Group, and she's going to give us the Calgary market update.
Perfect. So I'm just going to share my screen here. Just bear with me for a moment.
Awesome. It's nice when it works. It's good. Giving you, oh, there we go.
There we go. Okay, can everyone see that okay?
Yeah, that looks good, Andrea.
Great. All right, so for our Calgary market update here, I've pulled some of the most recent stats that came out for August 2023 from the Calgary Real Estate Board. And I think there's quite a few interesting things to discuss on this overall stats sheet. So the first one is August saw the 8th consecutive month of gain in benchmark price in Calgary. So the benchmark price now is at $570,700. And this is an increase of almost 8% year over year. So from last year in August, which is pretty impressive. We've been continuing to see prices rise. In terms of benchmark price, sometimes I do get questions about what kind of that actually means. So that is looking kind of at the average type of home, the average finishes within the city, looking at the price there. So then the next one here is sales. The sales increased significantly year over year, 27.9%. So we saw 2,729 sales in August, which was quite impressive. And the reason why that's quite interesting is because our new listings were also up. So our sales to new listings ratio remained very high at 87%. And that's really what has been preventing any gain in inventory. So you've probably been hearing that inventory in our market is low. And that's true, but it's not an issue necessarily of new listings not coming on or not becoming available. It is more the fact that listings are coming on and they're selling very, very quickly. So in August, we had an increase in listings up by 15.2% year over year. So over 3,000 new listings hit the market, but of new listings, then in terms of sales, nearly almost 3,000 also sold. So our inventory is quite low. When we're looking at the total inventory on the market, it was down 32% year over year. So then that leads kind of to this next number here, which is the months of supply. We're sitting around 1.19 for months of supply. Again, this is quite low for August. Usually we do see a little bit of a slowdown during the summer months, but this year was very exceptional in that we didn't see that. Anything kind of 3 months and below is strong seller's market. So we're sitting really within strong seller's market conditions. The average days on market is about 25 days. So when we're talking about price there, prices did trend up across all property types because of this basic supply and demand. Lots of demand, low inventory, or things selling very quickly, pushing the prices up. The biggest style of or property type that saw an increase was row style properties, and as well our condo market saw a big surge. So I think that's quite interesting that we're finally seeing some of those smaller property types really pick up. And a big part of that is also because of the way the interest rates are sitting right now. A lot of people's affordability, it's becoming tougher and tougher to afford a detached property or maybe even something semi-detached. We're seeing a bigger focus and push for row style homes, condo apartments, that sort of thing.
Yeah.
So looking at what is driving our demand or into the province of Alberta and Calgary in particular. These stats were pulled from Stats Canada, and Stats Canada is always a little bit behind. So the most updated stats that I could pull were from Q1 of 2023, but net migration into Alberta was over 51,000 compared to 16,000 in Q1 of 2022. So that's a huge increase of over 200%. Population gain coming into Alberta. So just looking at this chart, I think it really shows what a huge increase that has been. In one of our previous presentations, we had looked at it back at the end of 2022. So then this is beginning of 2023, just continuing to show the same trend. More and more people moving to the province for affordability. It's still relatively affordable compared to a lot of the other big cities in Ontario or BC because of new job opportunities, and as well as because of lifestyle. So then that's, looking at the resale market, but it's also important to consider rental demand. So according to CMHC, I think there's a few important kind of takes from some of their recent reports. And that first one is that renter household share is rising across Western Canada. And a lot of the migrants that are coming are younger than the overall population, and so they are more likely to rent. And trends are showing that we're going to continue to see lower vacancy rates, higher rent growth, and lower tenancy turnover. So overall, more rental supply really is needed. And when we're looking at Calgary specific stats, the City of Calgary's Housing Needs Assessment Report stated the following numbers. So rental vacancy rate was 6% in 2020 versus 3% in 2022. That's come down significantly. And then the average rent between 2020 and 2023 has increased by around 40%. Again, that's a huge increase for rents in our city. So one other interesting thing that I really wanted to discuss that is something that's going to be coming up, and I think is going to be interesting to see what comes of it and pulls from some of the stats that we've been talking about. So City of Calgary has launched a housing strategy to deal with what they're saying is a housing crisis. They're seeing, again, a lot of high demand, a lot of people moving to the province of Alberta and to Calgary in particular, and just not enough housing. So the strategy that the city is working on implementing includes 33 actions, and that work is underway currently. So they're working towards some of these actions. And the overall goal of this is to increase the supply of market and non-market housing and ensuring that there is a diverse range of options in all communities, so all Calgarians can find a home that meets their needs. So there is actually a committee meeting that's coming up next week on September 14th. You can be attended in person. It's going to be, I believe, at 9:30 a.m. or it looks like on the city website there is an option to view online. But I would encourage you to attend or view this as well, because they are opening it up to consultation from community members in the city for questions or suggestions, and they're going to be reviewing some of their outcomes that have been outlined in the action plan. And there's a couple of them that looking through the action plan that I found quite interesting and I think are going to be very applicable for investors. So outcome 1 in the action plan is to increase the supply of housing to meet demand and increase affordability. So under that, 1C4, it says they would want to prepare the necessary bylaws immediately to make the base residential district RCG with guidance for single, semi-detached, row, and townhouses. So that's very interesting, because that potentially is going to open up a lot of options. If the base residential, can include this multifamily and different options, it's going to create a lot more flexibility for investors who may be developing land or looking to purchase land and add different types of dwellings as well. Many of you may be aware of the current City of Calgary amnesty period relating to secondary suites. At this point, the city hasn't really commented on whether that's going to be extended or if they are going to hold the deadline of the end of this year. So I think it is going to be quite interesting, because there are still a lot of illegal suites in the city, and if they start to crack down as they've kind of said they would from the beginning, once this amnesty period ends, I don't think that's necessarily going to aid the housing shortage that we're already seeing if they're starting to, kick out tenants and in a lot of these existing dwellings. So with that though, 1C5 under the same outcome says that they're going to ensure parking minimums do not act as a barrier to affordability, including considering location in different residential land use districts in evaluating, reducing, or eliminating minimums. So currently, under the legalization process of adding a secondary suite, you are required to have 2 off-street parking stalls, so 1 for each unit. So it'll be interesting to see if this is adjusted at all, because sometimes that can be a challenge for existing properties where there may not be possibility to do so or add that additional off-street parking. This might help to give a little more flexibility there. As well, they've said that they're planning to make dwelling units in all multi-residential land use districts permitted use to enable simplified approval processes. So I think that's quite interesting as well in terms of secondary suites. Right now there are some zoning restrictions where it is either permitted use or discretionary use under all zoning, but if it were to be changed to simply permitted use, then it would also ease that process for legalizing or adding brand new suites. So a couple of things to kind of keep in mind. I encourage you to take a look as well. If you search the City of Calgary's housing strategy, you can view quite a bit of information on the website, including the document that does outline the outcomes. And again, if you have an opportunity to attend the community meeting or watch the community meeting next week, it'd be really interesting to see what comes of that and how the city is going to be moving forward to address some of these changes and action plans. All right, so that's all I have for a market update this evening. Here's just a little bit of our contact information as well, including our website, our Facebook group if you're not part of there, and then my contact information.
Awesome. Thank you, Andrea. That was awesome. I was just looking up to the exact stat for the months of supply for condos versus townhouses versus detached. And every time I look at this number, I'm blown away that it's not just detached homes. It's not just, the average home. Really, everything is in very low inventory. And we've been talking about that here for the last couple of years. Like as prices were rising, we've talked about that, how people are going to have to start shrinking back down into maybe something they wouldn't have chosen 2 years ago just because of affordability. But it's really good news for our downtown in terms of all that inventory we had laying around for many years. So it's really good to see our apartment sector now. What is it? The months of supply for the apartment sector in Calgary is just over 1 month of supply. So very strong sellers market as well. Even in the condominium market, I know I'm going to talk about strategy later, but I feel like I might forget this. So if you do own a condominium, now can be a time where we are seeing investors exit because they've maybe bought something, 5 to 10 years ago and bought at the height of the market. And we're seeing a lot of these investors be able to exit now and move on to something else that they would rather be doing with that money. Not necessarily maybe where they would want to sell yet, but that is happening. Like the prices are coming up and the inventory is down. So those people are actually able to exit should they choose. Whereas if they would have called us a few years ago, it was not an easy conversation. So that's really good to see, and also good to see some upward sort of momentum with property values, even on our most kind of at one time oversupplied sector of the market. So that's really good news. And in terms of the city stuff, the meetings, I highly suggest everyone go. Like, I think that's a really good idea if you can, or tune in virtually to know what is actually going on with a lot of these initiatives that are being proposed. There's a lot of talk also, of course, tenants are struggling right now to find accommodations and places to live. And there's a lot of pressure on municipalities in the province to do something about this. And of course, rent control keeps coming up as a topic. If we've researched rent control, that it doesn't really work that well, because if all of us have rent control on our properties, we are not going to want to own properties if we cannot bring the rents up to current market rates. And so it creates a problem and ends up actually forcing the mom and pop type investors to exit the market, then reducing rental products. So it's a bit of a catch-22. So I hope the city continues on the initiatives of removing red tape, allowing more development, and increasing density, because that's how we can actually add the supply to the market and still allow win-win situations for real estate investors, for tenants, and for everyone. So I hope that's the initiatives that we continue to see. Awesome job, Andrea. Next, we are going to talk about the mortgage world. So we have Ryan Bond here tonight. Ryan is often a guest speaker with us here. He's been a part of my world in the real estate space now for, Ryan, it's been 8 years since we met.
Is it 8 now?
It's 8. Yeah, I was counting earlier. I was like, it was like 2015. So we've done a lot of transactions together, a lot of business together, and have seen, of course, a lot of changing markets. So thanks again for being here tonight. And I'm going to pin you so we can all see you and let you give us the mortgage update. Take it away.
Okay, well, thank you very much for having me again. It's always nice to see some familiar faces out there and people I've worked with in the past. So always a pleasure to be here. 8 years. Wow. I don't think we've had, maybe one little brush up, right? I think one. That's not bad.
No.
Just kidding. But, I just want to keep it candid. I don't have those beautiful slides Andrea had. I've got this. So my chicken scratch on a paper here is all you get tonight from me. But I don't want to talk rates. I want to talk strategy because I am being forced to reinvent what we're doing constantly in an environment that is, something I haven't seen in 25 years. And people are coming to me with 3 things on their mind or 3 issues and not knowing what to do with them. And the first one is renewals. Whether you're up for renewal now or in 6 months or in 12 months, what do I do? And there are a lot of renewals coming up here over the next 12 to 18 months in Canada, over 1 million renewals. So what do I do with that? What do I do with my variable rate? Right? We got into it, it was super low, and then it just skyrocketed to the point where it may have been difficult to increase your rents at the same level, right? So you've got to honor those contracts and you're waiting for them to move out or renew, and then you can increase those rents. So what do I do with that variable? Or if you are underwater, right now people are thinking of selling their properties, and I'm talking to them about why it's so important not to right now, and what can you do to help your financial situation. For anybody that's heard me talk before, I'm a big fan of treating this whole real estate thing like a business. We shouldn't even be called investors. We should be business owners, real estate investment business owners. Because if we are looking at it that way, then we're anticipating higher interest rates. We're anticipating lower interest rates. And what are we going to do in both of those times? How are you going to structure your business so that you can prevent any downfall from happening? And what I mean by that is taking a look at your portfolio and making sure now more than ever that you've got that readvanceable line of credit on there, on your mortgage set up right from the beginning, because that is your place to go to, as any business owner would have, is a backup of funds or a line of credit to go to when things are tougher. And, you know, I have one client come to me recently. They can't increase rents here for a while. They're down about $300 a month. What should I do? And they want to sell it. And I said, you know, hang on to it. We'll do a few things to it and we'll get you going, and we'll get that $300 working for you in a different way. And I'm going to touch on that here over the next few minutes. But what I'm suggesting right now for my clients is that they go to a 3-year and ride the storm with a home equity line of credit. So I'm going to give you a couple of examples here, but you know, I looked back at some numbers a few years back, and we're looking at 289 just as this example on a $540,000 mortgage. We were sitting at about $2,239 a month, right? And all of a sudden, you know, we went with that variable. We're loving it, or you might be up for renewal, and now we're coming out. A renewal for a 5-year right now is 6.19 right now. How do you go from paying $2,239 a month to $3,255, right? What are you supposed to do with that? Well, again, increase rents if you can. But if we look at going with a 3-year, based on the amortization, we're going to be sitting at about $3,367 a month versus going with the 5-year. So it's $112 more per month that we want to take on, right? And why would you want to take that on? Because I think rates will go down over the next 3 years. And we don't want to do what 90% of the population does, is they lock in because, you know, there's that fear. And then all of a sudden 2 years down the road, they go, oh, rates are back down to 3.75. I want that. Well, you can't, because the bank says no, and they will hit you with a $15,000 to $20,000 fine penalty, right? So we want to avoid that. As business owners, as real estate business owners, we want options and flexibility. What gives us the most flexibility and options right now? That's a 3-year with a home equity line of credit. The reasons why I'm telling people not to jump ship, because they might be down, you know, cash flow $300, $500. I've heard of $600, $700 because rates have shot up so much. Is one, I just read an article here. It was on Daily Hive 2 days ago. By now, Calgary real estate prices set to climb this fall. There's a report from Remax suggesting that we might see a 4.5% increase in Calgary. You know, it kind of goes in line with what Andrew was talking about, what Natasha will be talking about. We feel that the market's going to continue to rise here. So I'm always a little bit more conservative. If you hang on to that $650,000 property at a 2% increase over the next few years, that's about $13,000 a year, a little bit more than that with the cumulative number, but you're looking at about $40,000 to $45,000 in property appreciation. The other part is that if you go into a 3-year and you just pay that down just normally as you would, nothing extra on that same mortgage amount, you're looking at about $26,000 in principal pay down. So together we're pushing $70,000 of value of equity put into your pocket when we're all concerned about that $300, $400, $500 a month cash flow issue. So what I'm proposing to my clients that come to me with this dilemma, again, they probably have some equity in their property because the prices have gone up. They might be up for renewal, or they're just, you know, underwater a little bit. Get the 3-year, do a refinance. We can actually bring it back to a 25 or 30-year amortization. There's nothing wrong with 30-year amortization. That keeps your payments low again. So if you've been into it for five years and you want to get it to 25 now, just go back to 30. We can do that. Keep your payments low. And you know what? In good times, you've got that extra cash flow, then pay it down. And all of a sudden you're back down to a 25-year amortization. But what we're doing with the home equity line of credit is we are buffering that $300, $500, $600 a month. So instead of it coming out of your pocket, we're going to look at using the home equity line of credit to basically help you fund looking after your business. And over the next few years, because it's such a short time frame, we can do one of two things. Well, in 3 years, you're going to be up for renewal again. We can either take that money, so $300 a month for 36 months. Well, let's slide that on the line of credit. If you want to put that in your mortgage in 3 years, you can. Or most lenders will allow you to lock in that portion as a mortgage. So you might lock it in as a fixed 1 year, 2 year, 3 year from there. So your business is going to take on some costs, right, in a high interest world. And we've got to be prepared to act like business owners and just readjust, put some here, and take a look at your portfolio and figure out what you can do with it. So those are just a couple ideas off the top of my head that I have been seeing a lot. And again, I mean, if you had to get out of a variable mortgage right now, which I think you would be a good idea because you're probably at prime, or if you're lucky, prime -1 or prime -0.5, or maybe you're prime plus, I'm not sure, but a typical variable mortgage is 3 months interest to get out of. So again, a business expense so that you can go into something that could potentially be 1%, maybe 1.5% lower for you right now. That can save you about $8,000 over the next 3 years. So there are some things you can do to be reactive with your investment portfolio. You just have to know kind of some of these strategies and look at it again from a business perspective. And that's what we're looking at right now. Those are the top things that have been coming into my office. And to go back a little bit on what Andrew was talking about, the migration, that is 100% legitimate. As a brokerage, we have we're about 70 agents throughout Alberta and BC right now, and the majority of what we're seeing is the fact that people are moving here from out of province. It's huge. We've seen the videos online. I think I saw one the other day. There was a lineup for a viewing of a rental property down to Calgary or something like that. I'm not sure, but it is happening. It's not just the media saying it. We're seeing it. And if any of you want to talk more about the 3-year HELOC strategy, I'm happy to help out. Because one thing I do feel for is when you're underwater and really not sure what to do, or if you're coming up for a renewal and just not sure what to do, feel like selling, I'm going to get out. I think it's if you run the numbers, that $70,000 decision could be really key in your investment portfolio. So I'm going to leave it at that.
Ryan, Nadine just asks, why do you suggest the 3-year over 2? Is that kind of your projection based on when you think the rates will make sense?
Everything that we've heard is, again, nobody's got that crystal ball. But the 2-year is higher. So they do this on purpose. So right now, again, the 5-year 6.19, the 3-year 6.56, the 2-year might be up around 7% or higher. It keeps going higher. So the 3-year is kind of like that sweet spot that is not a relatively high like the other rates, but can still make sense to do. If you're in it and you're 2 years in and you had to break that mortgage, your penalty is going to be much lower. 2-year might be a great option, but again, your payments are going to be that much higher. So the 3-year is just kind of what we're seeing a lot of.
Good question, Nadine. Thanks so much, Ryan. I think you make some really good points. I talk to a lot of people about that as well. They're like, well, we're negative X amount a month, but that's just one number in a whole lot of calculations that need to be made to decide if we should sell a property. Now, there's situations where people are, need to sell for whatever reason, but ideally, we're all buying real estate to build a long-term portfolio. That's why most of us got into real estate acquisitions. And so it's important to remember that when things get a little tough and to actually do the math, right? To actually do the math of what selling is is going to cost you if you believe Alberta is going to continue to see the growth, and that's where your assets are. That's what we're kind of talking about tonight. Then that's a very important indicator to be, not necessarily kicking yourself in 2 years going, damn, I wish I would have just wrote it out a little bit more, right? I wish I would have just hang on a little bit longer. And I think the options Ryan is presenting is incredibly smart and strategic, and could be a really good way to just ride it out and continue to see that equity grow over time and your debt continue to be paid down. On our property management side, on the properties I'm managing, the tenant situation here, I know there's a lot of landlords here as well, is really something right now. I've had people finding out who I am of properties that I own that I had rented up for rent a while ago. I don't even know how they're finding my number. These tenants are really truly investigators, but they're finding out you had an ad up a few months ago, is it still up for rent? And they're really desperate, which is really difficult to see, but that's why we need to be thinking of solutions. But as a real estate investor and as someone who hopefully we're thinking about the actual fundamentals of what's going to grow the economy in Alberta, people is the number one indicator. What are people doing? And as Andrea mentioned, the attractiveness of Alberta is not going to be going anywhere anytime soon, I don't think. And at least from my perspective, I feel the diversification that we're seeing in our economy, and it's continual and pretty robust, is what's going to hopefully lend stability for years to come for all of us. So it's a really exciting time for Calgary here on the ground. But that was really good. I want to talk a little bit about strategies, because I get a lot of questions as well. And number one, when thinking about strategies, the first thing I always talk to people about is what do we already have in our portfolio? Diversification, in my opinion, is the key to risk mitigation in all things. This isn't just real estate related. This could be all of your investments put together. And if you haven't sat down with Ryan as well, a great thing that he does is, he looks at your whole financial picture. It's not just about one mortgage. And so I love that they take that approach. And real estate is no different. So whether it's different types of strategies in the same city or different locations. So we're going to talk about some of the strategies that I think could make sense that 2 years ago I would have not suggested due to where we were at. My largest tip, no matter who asks me, is almost always the same tip. And that is aligning the real estate strategy with the market condition. When you force the strategy into the wrong market condition, it is a recipe for disaster most times I have seen. And that's where the largest mistakes get made. And so it's really easy to be I really want to flip a house in a time of a market that's going down because you are excited to do it, right? And so it's really important to line up the proper strategy with what the market is doing. So what could make sense right now? And most investors are struggling with cash flow. That's what Ryan just said. So for existing properties that you have, I do a couple things. So one is, number one, thinking, what else could you do with this property? Obviously, raising the rents up to market rent. And I am still in shock sometimes when we get properties into the property management side, or they want to look at selling, that some landlords are really leaving a lot of money on the table, but they're struggling because they don't know what they don't know. And so making sure your rents are actually at market rents. Making sure that you're charging properly for your rising utility costs, because that's another big bill that we've all been struggling with over the last couple of years. And making sure that in your lease, you have your utilities covered off. So even if you offer flat rate option on your lease, most leases, or ours do, hopefully yours do, have a term so that if you go significantly over that flat rate, you as the landlord can charge back those expenses to the tenant at a predetermined split if it's a suited property or whatever it is. So making sure that you're actually looking at your expenses on a monthly basis and actually seeing if there's anything you can do to reduce them. Same thing with your insurance. Insurance is a big one. This is one I seriously got caught on it. It's one of those things I just paid for years at a time and not paying attention, not spending the time to look at it. And recently have actually started to spend some time looking at it. And I was kind of kicking myself for not paying more attention to this in the last couple of years for our personal stuff. So that's a big one. But if you have existing real estate, if it's vacant or you're having a turnover, you could look at furnishing it. The demand for furnished rentals right now is massive. Again, if we were talking 3-4 years ago, I would have said, don't even bother. Like, just don't even consider it, because I would be concerned you wouldn't be getting what you need. Now, the downside to furnished rentals is you tend to have more turnover, maybe every, 3-6 months. But there is, like, I have one tenant who's been in a furnished unit for almost 18 months now, because they're building a house. And guess how long it's taking to build a house? 18 months, right? And so there is a lot of need for this in-between housing right now for people who are waiting for their houses to get built, or they're coming to Calgary to check it out for 6 months, or whatever it is. There is a lot of demand. My parents are even in between homes right now and a little bit homeless. We sold their house, and the house they're building is not complete. They are living in their coach motorhome in Cochrane right now. And my dad he talks to everybody. He was going around the motorhome park, and there is a lot of families there who are just waiting to get occupancy of a home that they've bought, or they're building something and have nowhere to live. And they're literally living in RV parks. So huge demand there. It doesn't need to be downtown. It can be in the suburbs. People will absolutely look for those types of properties. And because it's furnished, you can charge extra rent to help get extra money in during this kind of, hopefully, couple year period. So furnished, a lot of our investors are converting a unit into short-term rentals as well. So actually doing Airbnb, actually offering that. If you're not experienced with that, I highly recommend talking to Sarah Kirby at Infinity B&B. She's our go-to referral partner. We don't manage short-term rentals here, but she's doing a fantastic job for many of our clients. Now, there too, there's ups and downs with short-term rentals, but the demand, from what I'm hearing, has been excellent. And the people who have converted are very happy that they have actually done so. So short-term rentals as well. Student rentals is another thing. I'm sure you've seen on the news, there's many poor students really struggling right now, living in their cars, nowhere to stay. And, renting to students was, if we were talking years ago, it's like, okay, we don't necessarily need to consider that. Parents were buying a lot of these students' homes. But now, if you have a larger home and you have lots of bedrooms and you're seriously struggling with the numbers for you, this is something you could consider. Yes, there may be a little bit more labor of love involved for you to take care of things and make sure that the property is taken care of. But the demand is massive, massive demand. We rented one unit at the Winston that Wellshare owns. And this mom was literally like begging me on the phone and like in tears, and they have been fantastic. And it's 3 students living there together. And I'm really, really pleased that they were able to find something. So being open to those, not first choice, but in an area you could maybe ask more rent because it's a bit higher risk, right? Whether it's furnished or students or whatever. In that case, if you are using students, I put all the parents on the lease. So there's 3 kids, and 3 parents on the lease. So I'm protected if anything goes wrong as the landlord, or those, kids stop paying rent or whatever happens. I know that they're locked in for 12 months, and so are their parents. So that is a way to get into that space a little bit more safe if you're worried about the actual tenants in the property being students. The other thing is, this summer we did a rent to own webinar. We launched a new program with the Rent Live Own team out of Ontario. We do have, Andrea, we put that up on our YouTube channel, right? Yeah, we did it was the middle of summer, and so I'm sure a lot of people missed it. So I wanted to mention it. The nice thing about rent to own is if it's done properly and done ethically, I am a big fan of it. And I think it's a very solution-oriented way for the investor and for the tenant buyer. So if you have not, or if you did not get a chance to attend the event, maybe we can grab the link for that webinar here. And we can also put a link up where you can actually schedule a meeting one-on-one with the Rent Live Own team. We have a collaboration with them. Let them know you're from our group, and they will absolutely take care of you and walk you through that. See if that is a strategy that you're interested in. Now, this might make sense if you are looking to acquire a new property. They like to have the tenant be a part of the selection of the home so that they get to feel like it's their home, right? You want them to take care of it. They're ultimately going to be the end user. And it's a way to also bump up your cash flow on a property and reduce expenses. So that is a win-win when it comes to the actual math for you. So if you're not familiar with rent to own, but you are interested in it, and you want to go about it and be a solution provider for people who really want to own a home, please check that out. And we'll also put a link up for the Calendly if you want to schedule a one-on-one meeting with their team to learn if rent to own might be a good fit for you. And you could look at all different markets. It doesn't have to be Calgary. They work all over the place, and they definitely know their stuff in the rent to own category. The other thing that I've been talking a lot about is development. So Andrea talked about obviously increasing density and zoning changes, and what is the city going to do? And don't get me wrong, there is still red tape, there is still processes, and it is something that can be frustrating, but we have it pretty good here in comparison to other provinces and municipalities. I'm currently building a home outside of Toronto right now in Muskoka, and it is a totally different ballgame. I feel grateful for the processes we have here now that I know what it's like there. So taking advantage of that, if you're interested in development, now is the time for sure. Like, absolutely. We were building infill type properties back in 2016, 17, and into 2018, and did very well at it, but then it just didn't make sense, right? So again, aligning the strategy with what the market condition was. At that time, the market was starting to come down. Did not make sense to be developing, nice fancy infills at a time when prices were coming down, and everyone at the time also was trying to be a developer too. So we did well, but then we exited once that did not make any sense anymore. So if you're interested in that, definitely I would be looking at development right now if that was something I was interested in doing 100%. And we are seeing opportunities pop up. I know of a few right now, even that there is land out there to develop anything from, duplexes, fourplexes, to even small multifamily buildings. So if that's of interest, let us know too. How are we doing for time here? Okay, we still got 15 minutes. That's awesome. I wanted to talk a little bit about pre-construction too. So a lot of us and a lot of our clients, and we talked a little bit about construction. There's pros and cons to pre-construction right now. The wait times on the construction side of things are basically unpredictable right now, is what I'm telling people. We have people who bought, over 2 years ago and still have not received their letter of possession yet. Now, they were a little bit out at that point, so it's not like it's that late, but there's just so many variables and so many factors right now. And pre-construction period, this is not just to do with Calgary. There's some, areas where it makes sense. There's some areas I'm a little bit more hesitant. So just be really strategic with the pre-construction, and also understand the risks. A lot of people think, oh, well, there's not a lot that can go wrong. There is a lot of projects getting canceled out there purely because the numbers just don't work for them anymore, with what it costs to build, what it costs to finance, all of those things. So there are risks in pre-construction. Now, you will get your deposit back if a project is canceled, but it's still money out for X amount of time, right? So we're being very specific with the pre-construction that we are getting involved in and we are promoting, and I'm turning away more of it than I am promoting. Let's kind of put it that way. I also think this year, over the next year, will be a great time to also start looking outside of Calgary, start expanding. Everything that's happening in Calgary is and will continue to trickle out into the province, right? So even the smaller centers around Calgary, up the road to Red Deer and Edmonton, there's some projects I'm even looking at up in Edmonton that I'm excited about. There's some builders I know that build in both cities, and so we've been brainstorming things that we can do in both cities. So I may have a couple things to announce with that in the coming months that I'm really excited about. But these are things that are already started, or I know that are underway. They're not 2-3 years out. And if you want to go the route of the 2, 3, 4, 5 years out, the upside is, number one, you don't need to get your financing right now. You don't need to close right away. Please remember, you do still most oftentimes need to get a pre-approval letter still. Many people think they can just, buy it. And the lenders for the construction usually want to see that you are ready to go in terms of your own financing. So, but just be aware that a lot can happen in 3, 4, 5 years by the time these things close. We have no real crystal ball that far ahead as to where the market will be or where things will be sitting at that time. So it's just one of those things. It works awesome when it works awesome, and it can be a little bit of a letdown when it doesn't. So just keep that in mind. And then I want to talk about one more sort of active type strategy, which is the multifamily strategy. WealthShare is the real estate investment trust that I'm a co-founder of, and we did a really great event this summer on commercial financing and the multifamily space right now. We could talk for at least an hour about just that alone right now. So if you want to check that out, or you're interested in multifamily, the WealthShare YouTube channel, that video is up there right now. And if this is of interest, like, we could do another commercial event for the Phipps Real Estate Group if people are really interested in the multifamily space. But there is definitely a lot of challenges on the multifamily commercial side as well right now. If you are looking at multifamily right now, I would consider trying to find something with an assumable mortgage rather than starting from zero, particularly if you want a CMHC insured mortgage, just because the wait times are incredibly long right now. So that's one thing that we're doing with our clients, is trying to hunt those down. And then the interest rates are much lower as well, and can sort of speed up that CMHC process. Someone's at the door. 1 sec.
One thing I was going to add, whose question was that? Oh, Nadine's, why the 3-year versus the 2-year? We have to put that stress test on the financing as well. So when we're doing, as we go lower and lower, the rates go higher and higher. And when you get to the 1 and 2 year, you're stress testing at like 8.5%. For clients. So that, that can really throw off the whole file. So we're trying to get that in between that works with the stress test as well, for you as the client, to make sure it fits in your numbers. So I just wanted to add that in there as well.
Sorry about that, guys. Dog's going crazy with the children at the door. What was I talking about? I was talking about multifamily. If you want to check that out, go check out that video. I think we delivered a lot of value on that one, and what we're learning and seeing out there, and what the challenges are. So check that out if multifamily is interesting to you. And then to kind of wrap that up too, in terms of what we were talking about with diversification and portfolio building, also not forgetting your passive opportunities, right? So kill these dogs. So private lending is a big one that a lot of people are doing right now. Sorry, guys, 3 dogs too many. Passive lending right now is a great thing to look at. We could talk about that for an hour as well, but combining the strategies, right, to make things make sense. So some people are lending from their line of credit for other projects or whatever. I'm not going to talk about who to lend your money to, but it's a way to, maybe overcome what you might be short somewhere else, right? So getting creative with what you have available to you. There is a lot of demand out there for private lending for all kinds of projects, and maybe that could be another event that we do. But getting creative with what you do have and what can it do for you, as kind of Brian talked about as well. Any questions about anything? Does anyone have any comments, questions, thoughts? Anything anyone is struggling with or wants to ask about? No. Oh, Colleen, go ahead. I think you're muted though.
There we go.
There you are.
Hi, I'd love to just ask Ryan strategies. He did mention if you've got a variable rate mortgage and you might want to pay the penalty and just refinance that one currently. What if you're in a situation where you're with one of the banks that hasn't increased your payments? CIBC, BMO, some TD mortgages. The payments are only covering part of the interest and your amortization period is getting longer. From a cash flow perspective, this is nice because, of course, we're trying to raise rents, but depending where your property is, Ontario, not so easy right away. Do you have some thoughts on any sort of strategies? Ideally, cash flow is nice to keep. It pushes the problem a little bit down the road, but what are your thoughts on mortgages that aren't going to renew for 3 or 4 years from today, but are in that position currently?
Good question. I kind of go right back to the beginning and take a look at everything as a whole. It depends on what the penalties are as well, right? Do you have a variable rate? Are you going to pay the higher IRD penalties? But you can kind of go through each step in each property and sort of evaluate it on a case by case basis. Going through your mortgages is one thing. I love that Natasha touched on the energy. For people that are on variable rate energy pricing right now, you can lock in on a 3-year fixed and get out of it with no penalties. So why wouldn't you do that, right? And then you control your costs for that building for the next few years. Insurance is another one. I'm a part owner of a home and auto insurance company here in Calgary. And we actually have people, believe this or not, canceling their home policies right now. Wow. Because they can't afford it.
Can't afford it.
And it scares me that is happening, but there are ways of going and looking at that policy again, and for whatever reason, each insurer will look at it differently. Some insurers will inflate the land value. Well, you know what, if your house burns down, your land's still there, right? Yeah. You don't need to overinflate certain things. There's blanket insurance policies you can put on several properties that can bring the cost down. So once a year, I say this in my personal life, I go through my Shaw, I go through my cell phone bill, I go through all of these little things, the energy, the NMAX, whatever it is, because it's like, if you just put it on cruise control, I guarantee you there's a new program that came out. It's like their new bells and whistle program this year that they're offering, and loyalty programs and stuff like that. So same thing with your investment properties is to look at them and go through the costs and go, where can I save some money? It's a little bit of work, picking up the phone and calling some of these places. But to answer your question, I look at everything. Another quick example for you, I had a client come to me recently, and she wanted to buy a new property. She just went through a separation. She did very well for her income. There was one thing dragging her down, and for whatever reason, somebody got her into these life insurance policies that she was spending about $4,000 a month on.
Whoa!
And it's a savings combined insurance. I'm also insurance advisor as well, financial advisor. So I'm familiar with insurance policies, but this is something else that I'm looking at, right? I'm looking at your overall picture. But long story short, we got rid of those $4,000 a month insurance policies, and we got her into a $280 a month insurance policy.
Wow.
And all of a sudden she's like, okay, I can afford this. And the confidence and everything that came, sometimes you just trust, right? But having a review of all those different things that we pay for on a day-to-day basis, whether they're personal or business or what have you, is something that can go a long way in saving you some money.
Okay, Ryan, every year you go through that, you need to send us all a nudge or a scream.
Yeah.
I am terrible at that. I'm the first to admit this. I'm not, I just pay it. And then eventually I catch on and I'm like, okay, I'm such an idiot. I wish I would have looked at that earlier.
Well, you know, when I am the one that was guilty for not looking at the fixed versus floating costs for my energy. And about a year ago, I'm going, why am I spending so much money? And it just, yeah, hundreds of dollars a month. I could have been way lower. So
yeah, it's super substantial.
Yeah.
And then if you actually own multifamily assets, I believe too, you can get the energy consultants. And I'm actually on a waiting list for one of them. They're in high demand apparently. But apparently that is supposed to be quite lucrative as well in terms of saving in the energy costs. So I'll report back once I actually have a tangible case example of what that looks like. But again, something I haven't used, didn't know how it works. They explained it to me, so I'm just waiting to get the actual work done. So we'll see how that goes. Judy asked about lenders. So I'm not going to personally recommend, like there's all kinds of places you could lend. The only place obviously would be the things that I'm working on that I know about. So WellShare does do on occasion short-term private lending as well as long-term investment. So if anybody's ever interested in learning about that one, let me know. But if you ever want to, have a chat as well, or maybe if this is of interest to people, like the private lending space, we could go over how I would vet someone, how I would vet a project, what I would, be careful with, the different types of structures when it comes to private lending. Like there's, just the basic IOU, like a promissory note, right? To actually buying shares in a company or units in a limited partnership, even on short-term money. So there's a wide range of how these types of deals can be structured and a wide range of what the money might be used for, which will often then dictate the risk on the capital, right? So if that's an interesting topic for everybody, I have dove into this very heavily in the last couple of years, and we'd be happy to kind of share what I've been learning along the way and things I've learned from a lot of really smart lawyers as well. So if that's of interest, that'd be a really cool topic. And I think it's a great way right now that we can get our money to work for us, make up a little bit of losses over here just to make things a little bit more comfortable. Chris, you like that too? Okay, cool. Yeah, that I think that would be a fun event. Maybe that's something we could even incorporate into the live event. For those of you in Calgary or in Alberta who want to make the journey, our next event is actually going to be live and in person on October 4th. Andrea, myself, and Ryan are all going to be speaking. And we also have a couple guest speakers as well. Patrick Francie from Rain is flying in as our kind of keynote speaker and giving his economic update. I'm going to try to figure out if I can stream it this time. The last one we did I did not stream it, but I know not everyone is here. And I think there's going to be a lot of really good value shared that night. So I'm going to try to work on that. And then last is I do want to, just because obviously this is something I've been working on, is talk quickly about WellShare. If you guys aren't familiar with it, I'm just going to share really briefly our website and the information on it, because this comes up in a lot of my conversations. This is our real estate investment trust, or private REIT, and we are buying multifamily assets here in Alberta. So this is a great way to get your money to work passively, and also not having to carry the debt on your own, take care of the management. And you can invest in WellShare with as little as $5,000 or more. And we accept cash or registered funds. So if that is of interest to anyone here, this is a long-term investment opportunity into multifamily assets, and is a great way to, again, diversify the portfolio, and for, possibly have that as one of your slivers. So pretty cool. We are very excited. We have now $20 million of assets under management and almost 200 investors into WellShare now. So we've come a long way in our first year, and are excited to kind of hit our next milestone, which is our target goal of having a $100 million portfolio by the end of 2024. So it's pretty exciting, and we've had some amazing support with our investors along the way. So I won't talk too much about that. If you guys want to, learn more about it, set a meeting with me and we can sit down and chat about it. So yeah, something else I'm pretty excited about.
We have one more question for Ryan in the chat. Just regarding, Ryan, if there's been any changes to short-term rental mortgages from Michael. He was saying eventually we'd like to get the equity out, but we can't hide that it's a rental. Just wondering if there's an update or any news.
Unfortunately not. They're staying status quo on that. So I know it's frustrating. You know, if there is a decent amount of equity, there are some privates that are doing the home equity lines of credit that might be an option to use, and just you know, backdoor it that way. But with the big banks, no, there's no change to that.
There's also a question, what's the best way to get in touch with you, Ryan, if someone wants to set up a meeting?
Yeah,
Oh, okay. Yeah, you know what? I can just, I'll put my email address in here.
yeah, type it in there. And if anyone's watching the recording, maybe Andrea, we could put Ryan's email in the description.
Yeah, absolutely.
Or just reach out to us. We can obviously get you connected as well anytime. Perfect. Handing out his cell. That's awesome. Norma, I just want to make sure I understand your question. So maybe send me an email on that. I just want to make sure I understand specifically what you're asking. So feel free to send me an email. I'm going to put my email in there as well. There's my email. So it seems like there's definitely interest on the private lending side of things. Also, if you're looking at projects, like raising capital right now is obviously another big topic. If you're wanting to do development or any sort of projects, raising kind of that short-term money right now, like, you know, inside of say like a 12-month term, is relatively easy. I mean, like there is a lot of demand for that. I'm finding a lot of people are happy to get their money to work for them right now, but they also don't want it out too long. And so it could be a good time if you're looking to raise capital for any sort of projects. I think the timing could be good on that from what I'm hearing of what a lot of people are looking for right now, which is also why, like for even WellShare and our own projects, we are doing a combination of long-term investors, but then we also need to use short-term funds for the actual acquisitions because they happen so quickly. But it's been working great. So that's something you could do for your own projects as well, for sure. So private lending is a good topic. Maybe I'll see if I can get one of lawyer friends to come for that. Any other questions? Is there anything anyone wants to know or is struggling with or needs any help with or wants to get the group's feedback on? Thanks, Colleen. Yes, October 4th. Oh, do we have the link for the event?
I will grab it. Just give me 1 second.
Let me see how many registrations. So this one being an in-person event, there will be a limited number of, I think we can have just over 100 people in the space. So if you do want to come, like grab your ticket now so that you can secure your spot. It's going to be at the same one we had last time at Trolley 5, downtown Calgary, October 4th. So it should be an awesome event.